Hello and welcome again to another episode of the Bitcoin News Show. I am, of course, your host, Vortex, and you are right here on the World Crypto Network YouTube channel, one of the best places for news and information about cryptocurrencies. We got a pretty great show for you guys today. We're going to be talking about the Bitcoin crackdown, the Chinese trading fees, and those damn ICOs that just never seem to go away. And we got a couple of amazing guests as usual. We got a special guest tonight. We got Joel joining us. We got Edward joining us, Chris joining us, and so really excited to have a good discussion here about Bitcoin. So without further ado, let me just get right into it and say welcome, Joel, so much. Thank you so much for joining us, man. We really appreciate you taking the time out of your Sunday, the day of rest, right, to join us. So we really appreciate that. We've got a few questions for you. Real quick, maybe I'll just have you introduce yourself to the audience.
Sure. So first of all, thank you for having me. This is, in my mind, the best way to spend a Sunday afternoon. So thank you for that. So very quickly, my name is Joel Monégro. I'm an analyst at a venture capital firm called Union Square Ventures in New York. And we've been investing in Bitcoin and blockchain companies since 2013 when we led the Series A in Coinbase. And then we have continued to invest in more sort of blockchain protocol layer companies since, like OpenBazaar and Blockstack and BFS and all those things. So Bitcoin and blockchain is something that we're really, really interested in and something that we spend a lot of the firm's thinking resources on. And it's where I spend most of my time working.
Awesome. You mentioned Blockstack. We're gonna have Ryan Shea on hopefully next week the next show from Blockstack. He's doing some really interesting things over there, and we're really excited to talk with him about the decentralized internet. Right? We want a decentralized internet, encrypted by default. So very cool. So let me just ask you real quick, Joel. How did you get into Bitcoin? Maybe in just like 2 or 3 minutes. Let us know.
So the story starts in the Dominican Republic, where I'm from. I helped start a company that was a payments processor company called Score. And it had nothing to do with Square, but it was called Score. And we were building a payment processor for processing credit cards over the internet for the Dominican Republic, where, it's kind of like Stripe for the DR. But we had ambitions to expand and offer the same service in Latin America. And the thing that made it a challenge for us to do that was that if you take the US, there's an integrated financial system. A company in California plugs into the financial system, can service customers in New York. Europe has also a similarly integrated system. And in Asia, it's not so much integrated as much as they have very large markets. But what you have in Latin America is very small markets and a disintegrated financial system that makes it difficult for you to create financial services that service the entire continent. Eventually, we had to wind that company down because we ran into regulatory hurdles in the specific way that we were doing payment processing in order to compete with the incumbent, which was owned by all the banks. And I went to work for the government of the Dominican Republic shortly after on government programs and public policies to try and help the startup ecosystem. And the first thing that I wanted to do was try and fix the regulatory hurdles that made it difficult for our payments company to succeed. And in sort of working there and also traveling around Latin America, meeting with my sort of counterparts in every country, encountered the same problem. And I just thought, Jesus, I mean, there are efforts that are out there that people are working on and governments have been working on that will take 20 years to achieve the result. And I just hope, why isn't there a protocol like the internet for transferring money? And lo and behold, that's Bitcoin. And that's how I got into this whole thing. And then about a year after working for the government, I came to work for USB, where I get to spend all of my time sort of going deep into this. And now I've crawled myself into a sort of blockchain hole that I can't get out of. So I guess, but I know what I'm doing for the next 30 years.
Awesome. That's a good feeling, right? That's what the people in the early days of the internet felt, I think. I mean, they were like, okay, this is, early 90s or late 80s. Okay, this is what we're going to do. We're going to bring this to the masses. Like, this is, that's why, so many people, I think, feel these similarities to the internet in the early days, because it really is that excitement. Even 8 years later onto Bitcoin, like, it's still, the internet circa 1992, right? So it's still early days. So that excitement is still going, despite, of course, the block size debate. Well, but that's a whole other thing. I think even that won't be able to bring down most people's spirits. They can just it's just gonna maybe have a little bit of insult throwing on Twitter, but we can get over that. So so let me ask you this then, because I know that first, real quick, let me just thank Chris Berneski for your contact and for allowing us to meet and for you to be on the show. Both you guys have been in New York finance and things like that, and been close to Wall Street and stuff. And so let me ask you, Joel, what is kind of the current atmosphere among VCs, maybe not just in New York, but regarding Bitcoin right now, like versus the last couple of years? What is it right now?
So I think something that's captured or beginning to capture the attention of VCs is sort of the ICO trend. And this is very different. We've been investing for a couple of years now, and I remember when we were looking at blockchain companies in 2014, when we started making more of these investments. There's still speculative investments, but it was much less clear to us how these companies were actually going to generate a venture return. And we're a venture capital fund. We at the end of the day, we agree philosophically in what these companies are trying to achieve, and we believe in a decentralized web, and we believe in the decentralization of power, market power. But at the same time, we have to provide a return to our investors. And so we supported these companies, and we went into these investments having no idea how they were actually going to create financial value, but with the conviction that something about the nature of open data in a blockchain architecture that felt very important. Now, at least in our firm, we have a lot more clarity around how this model works, and it sort of goes back to tokens. And we've been spending the last almost a year sort of thinking and analyzing and studying and developing a thesis around tokens and why they're important, tokens, altcoins, et cetera, and how they enable the creation of these networks. And so that is a sort of thesis that, at least in my conversations with other investors, has resonated well with them. And as a result, we're seeing more funds sort of paying attention or coming back to blockchain with this sort of new lens in mind about the potentials of cryptocurrencies as a way of tying these networks together and also creating financial returns for early investors, as opposed to back in 2014, when it was really unclear how these companies were ever going to create open source good technology, yes, but generate a financial return was much less clear.
So then, where do you see kind of VC going in the next couple of years? Do you see it swinging mostly back to Bitcoin then from blockchain, or is it going to be increasing blockchain and Bitcoin just going to be underneath it? Like, where do you see them, Bitcoin versus blockchain VC investments over the next 2 years?
So I'll tell you something that's been rattling in our minds, and it's when and how are we going to start buying cryptocurrencies as a fund? And that's an interesting conversation to have as a venture capital firm, because buying a token or buying a cryptocurrency as a network is a very different investment from buying private stock in a small company. You're buying something that's not a security, it's not a share, it's something completely different. It's liquid, which is unusual for venture capital investments. So we have to figure out a bunch of things around that. But I think we're at the point where we have conviction about the if and why for buying these tokens, and we're trying to figure out the when and how. And something that we did that a couple of other venture funds have done is we invested in a cryptocurrency hedge fund called Polychain that was started by Olaf Carlson, who was one of the first employees at Coinbase. And it's sort of, we're seeing Polychain emerge, and we're seeing a whole other sort of new class of hedge funds or investment funds that are investing in cryptocurrencies, and we're seeing them get a lot of interest from investors. So I think there's two things that's going to happen. One is we're going to see a lot more of these funds sort of just focused on the cryptocurrencies and the tokens and investing in crowd sales. I think there's enough capital out there to sort of speculate on the success of these funds, which is going to seed a lot of sort of this early capital. And then I think after a lot of the infrastructure has been built as a result of these startup funds sort of creating the demand for investment infrastructure for larger funds, larger institutional funds to participate, then we're going to see more sort of traditional venture funds like our funds investing directly in tokens.
So we're really only kind of maybe a couple of years from another VC bubble kind of forming, do you think? Because it kind of went down a bit in Bitcoin, right?
In Bitcoin, yes, but the thing is, I think that we were looking at the right things, but investing in the wrong instruments. And a while ago, I wrote a blog post called Fat Protocols, which is sort of our realization that in these networks, with this architecture, the thing that accrues the most value is the protocol itself, rather than companies building on top of that protocol. And that has something to do with the fact that the protocol has a currency or a token that is freely tradable, and any success of any application on top of the protocol creates more value and more speculation in the protocol. So you could say that the protocol is as valuable or more valuable than the whole suite of applications built on top, and so it makes more sense to go and do that. So I think that there was that bubble in Bitcoin investing in Bitcoin companies at a time where we didn't really understand that any success of those companies was just going to drive more financial value to Bitcoin, the network, and that's what happened. And as a result, realizing that it's very difficult to extract margins out of a shared infrastructure like Bitcoin, then that sort of cooled down a little bit. But it's not that we were wrong about the space or the thesis about decentralization, is that we were looking at the wrong things. And it could be that tokens now, as more people begin to understand cryptocurrencies and begin to understand how to invest in them, it is possible that causes another sort of bubble, but this time in the tokens and the networks themselves, and not necessarily private companies.
Interesting. Okay, very cool. So thanks very much for your thoughts on that. I think we can get right into the topics then, if you guys are ready. So let's start out with our first topic. This one's pretty interesting here. The Interpol and Europol recently had a conference where they outlined stricter Bitcoin regulation, including a ban on mixers. So I just want to kind of ask the panelists, like, what does this mean for Bitcoin in the near and long term? We'll go with Joel first. What do you think this means?
This is such an interesting topic, the topic of regulation, because on the one hand, we want to see the space experiment and have the freedom to innovate and try a bunch of different techniques and tools and technologies like mixers and things like that. On the other hand, we kind of also believe that regulation is crucial for the success of a technology. And one analogy there that is very sort of that is very easy to grasp is that we invented cars, but it took sort of a lot of regulation to make sure that everyone can drive them safely, and that we're not killing each other on the streets. And so it was important, and then you can sort of trace that back to any new technology that sort of takes the world by storm. It starts with this sort of very Wild West environment, but in order to guarantee the long-term success of the technology, you need to have some checks and balances in place. And that's where regulation comes into play. The thing that I'm concerned of is, that a lot of people are concerned of, is trying to regulate this new thing as the old thing. So basically trying to apply regulations that were designed for other kinds of systems to this system. And specific to the sort of point about mixers, there it's a little bit less abstract. There you can see why law enforcement is less interested, or why law enforcement would not want such a technology to exist, and you can make the right argument. I haven't really wrapped my head around whether or not mixers are good or bad, but I do think that, there are other currencies like Monero and like Zcash that will offer you privacy services. And so I think the broader conversation here is, how useful really is it to try and clamp down on these things versus really try and understand them and build tools to work with them. And that's more of a general point of view on regulation. So it's an interesting topic, and I don't have the right answer other than I hope that we don't overregulate and kill this before it really makes an impact in the world.
Yeah, it is interesting that it seems possibly like the system is running a little bit scared, because to issue this type of, to tell every single country like ban mixers, like they're either scared or they don't quite understand what's going to happen with, right? Because this is kind of the amount of good that could come from Bitcoin is so huge, we just can't understand it yet, like we couldn't understand the internet back in the early days, what it could be. Only very few people could, right? There was only very few, but for the rest of us, we just couldn't kind of see all these layers that could be built on top of it.
Vortex, yeah. I think partially what you're seeing in the space right now, if you go back to the genesis of Bitcoin, right? As with any great new technology, one of the earliest adopters are criminals, right? And I think that that is the sign of a great technology when it's being used because it outpaces the technology that's currently available for law enforcement. And I think that when you look at Bitcoin's progression over time, I think it was the University of Wisconsin, London Central Bank, or was it Germany? No, I think it was Germany Central Bank, and a couple others released a white paper on Bitcoin going through the network forensics. And they talk about its three eras, where it started off as the miners, right? Really the hardcore cryptographers or cypherpunks. And then it got into what they called the sin activities era. And then now it's emerging into this mainstream currency. I think that the rise we have seen with Monero, I think it's gone 20x in the last year, right? And Dash, people have their theories on Dash, but Dash has also increased, I don't know, from $2 in early 2016 to I think it's right now around 15. We were seeing the ascent of Zcash. There still is that demand for privacy, and it's not necessarily going to be Bitcoin that fulfills that demand, right? Because even mixers are somewhat flawed. You can figure out what's going on with the mixer. I think that Zcash or Monero is going to be much better at providing the privacy within a transaction than Bitcoin necessarily will be.
And then, of course, when you start combining them, right? Like when you go through Monero, then go through Litecoin, then go through a couple other coins. That's the ultimate mixing service right there, right? Is to be able to just go through all these coins, because there's going to be services eventually, even with Lightning, this is possible, to be able to move one coin that moves another coin that moves another coin in such a way that it'd be really hard to trace once it goes through enough hops. But we'll go with Renegade Investor here next. What do you think about this, the Interpol, kind of just issuing this blanket statement against cryptocurrencies?
So there's a lot of different forces at work here and a lot of different things going on. But you'll remember that in December, I put out a tweet saying, I put out a joke agenda for Davos 2017, talking about how this year was going to be a real clampdown on Bitcoin. And that's exactly what we've seen straight after the conference. So I was doing a bit of research today around the Basel Institute of Governance, and it turns out that they're actually partnered with the WEF, or the World Economic Forum. So for me, the reason we're seeing this, I think Bitcoin is really becoming a threat to them now. And they're literally getting to the point where they're starting to take action. So they've created the these three different groups of people to try and sort of clamp down and recommend more regulation for Bitcoin. And the reason I don't think this has much to do with making Bitcoin safe. And the reason for that is because these people have failed to prosecute white-collar corruption and fraud in the existing financial system. So I don't think it's anything to do with that. I think this is to do with control of Bitcoin, because they realize now that they're not going to be able to compete with it, especially with R3 CEV falling off and Bitcoin becoming a dominant sort of cryptocurrency once again. So the question should be, should these people be even looking to regulate this? Because not only have they failed to do their job in the past, but they haven't got any skin in the game. They've not contributed anything towards Bitcoin. And I don't personally believe they probably understand Bitcoin. So because of that, you get a lot of problems coming in. So the first would be what we saw with the PBOC recently, the Public People's Bank of China, is that when you have heteronomous regulation coming into an autonomous system like Bitcoin, that causes a lot of volatility and problems because the system isn't used to it. It's not used to that kind of governance. You know, it's more of a free market. So the way I see it, regulation, it's not going to stop Bitcoin. I think it will slow it down if they try to implement it. One of the biggest problems I see is that if they do try to regulate Bitcoin, whichever country they do it in, the problem they have is there's regulatory arbitrage. So any company can choose which country to set up in. So I believe that if a country does go quite draconian, then they're going to push away all the entrepreneurs from that country, and they'll just go to the one which gives them the best environment in order for them to set up their company. The other big problem is no one knows how Bitcoin or cryptocurrencies are going to play out. So if you introduce regulations now, there's no guarantee what knock-on or ripple effects that could have in the future. You have no idea if that could centralize risk in one area or another. So what we have now is the thing I like about it now is when there's a problem, like for example, we had Mt. Gox, Bitfinex, Cryptsy, all the companies that have a problem, most of them sort of go out of business. But what happens after every single problem is the exchanges get more secure, or there's more of them. So in the free market always resolves problems within a network, but it's when you introduce regulations, in my opinion, is when you upset that natural balance of having problems and resolving them. And I know there's a risk involved with that, and I actually lost coins during the Bitfinex hack as well. But it's a risk that I knew I took, I knew it could happen, and I accept it. So I would like to see hands-off regulation for the time being. Maybe in the future, you know, there could be some light touch regulation that's needed, but I think it's too early to apply regulation to this industry because there's no telling of the knock-on effects it could have.
Absolutely. To me, it just seems like it's just way too early to be having this kind of, you know, almost draconian blanket kind of regulation. To have these advisements, just have, you know, these countries just completely global to say, look, you have to, you know, crack down on this, you have to crack down on that. And I think that most of the countries are just going to look at this and be like, oh, okay, agree with that, and then go back and, you know, probably go back and just start telling their people to get educated on this. You guys need to learn about this right now, because clearly these guys are concerned about it, right? The world is concerned about it. So we got to go educate ourselves. So I guess probably in the end, this will, as usual, you know, all news is good news, right? Just push more people to do research into Bitcoin and blockchain and to figure out like, what is this really for? And then of course that makes you start asking questions about the current system. So we'll see how that goes. It's really interesting to see this kind of stuff. And, you know, as Tone said too, on the Bitcoin group, basically, you know, these people are trying to kind of think of Bitcoin as money. And, you know, Bitcoin is so much more than that, right? It's programmable money. It's store value. It's a payment network. It's so many things. So we're seeing this, at least it appears to me like all this regulation that's trying to happen, that they're trying to push down the pipe is for Bitcoin as money. But I think we're going to find out more that, you know, Bitcoin is much more than money. So we'll see. Does anybody have any other comments on that?
I would go with your closing comment there, Vortex, about this idea that this will cause people to do more research. This is something that Joel alerted me to, actually, the potentially anti-fragile characteristics of a blockchain network, in that when you know, the basic tenet of anti-fragility is that stresses on a system actually make it stronger. And with Bitcoin, I think that over-regulation in certain geographies, because Bitcoin is a global currency, or a global, well, I'll call it a currency now in terms of means of exchange, store value, and unit of account. When you put constraints on it in certain areas, it will pop up in other areas with more force, right? It's like the game of whack-a-mole. And I, therefore, am not overly concerned about regulation that may or may not hurt Bitcoin, simply because you can take Uber as an example, right? A lot of regulation has come after P2P ride sharing, and when the people demand something, it's able to break through different errant regulation. And regardless of what happens, given this announcement, I think that if it comes overall or over time to put a limit on people's intended use of Bitcoin, then Bitcoin would find a way to innovate around that. That's my general take on what happens within the regulatory space in Bitcoin.
Sure. And, it seems also like could be a knee-jerk reaction to crypto locker and these other type of crypto locker type applications that, now there was just a news out recently that now there's crypto locker software as a service. Right, you can pay, you can literally pay. You put how much in, you put the date that you want to have the ransom be ended, and all of this stuff, and it's just type it in and go. So now I kind of see this as being a little bit of a knee-jerk reaction to that, because instead of just saying, oh, got to kill Bitcoin, we got to say, okay, why is our security so horrible in computers, right? Because the reality is we've never had to protect digital money. Right, we've never had to, because obviously if we did, we would be building our computer systems like nuclear reactors, but like that type of security. But we're not. So we just have like these limited passwords. And before the internet, of course, we just had very small passwords. So it seems like this is going to be possibly good for the industry, because it's going to increase network security, and it's going to increase these types of best practices that should have been taking place already, but didn't really need to, because we didn't have to protect digital gold. Does anybody have any comments on that?
Well, it's the same thing with banks, right? Early on, there were a lot of bank robbers, and now there's a lot less bank robbers, because it took a lot of people robbing a lot of banks to figure out vault technology, and figure out the thing that sprays you ink, and figure out all these things to thwart thieves, and figure out the whole insurance market behind the whole thing. That took a really, really long time. And compared to that, this has taken place really, really quickly. I mean, I am impressed with the level of security that applications from all kinds of Bitcoin applications on the web are now imposing and promoting, like, even moving away from SMS-based two-factor authentication and withdrawal holds, and all of these tools and that help keep your assets more secure. And I think that it is a direct result of all of these attacks.
Absolutely. We'll see what happens. I just hope that the crypto locker and cryptocurrency will drive the demand for a new decentralized internet. That's why we're really excited to talk to Blockstack, because they're one of the companies that's trying to do that. There's a bunch of others, Made Safe and things like that. And I'm just excited about it all. I just want to see it all. I'm just excited about it all, that it's in the laboratory right now being cooked up. Like it's going to be here. Everybody sees the end result. We see what we have now, and we see what could be. And so we're just trying to get from A to B as fast as possible right now. And it seems to me that cryptocurrency is really driving that demand. So if anybody else has anything to say, go ahead. Otherwise, I think we can move on.
I've got sort of one last point, if that's all right.
Oh, please.
So the other big problem they have here is that if governments come down pretty hard on Bitcoin, they're going to get out-competed as well. So you imagine now any centralized service that tries to get regulated, they'll make it decentralized. In the same way you saw with sort of BitTorrent, instead of when they tried to shut down centralized file sharing, then it becomes decentralized. So that's what you're going to see. And the reason why they're not going to be able to compete there as well is that if you see a massive wealth transfer into Bitcoin, the amount of resources that these genius programmers and developers are going to have is going to be astronomical. At the same time that all the people trying to regulate these services are going to be, I think, losing capital because of the cuts being made by indebted governments. So there's going to be a complete crossover in resources that they can dedicate to this. And I looked today at the funding of sort of these organizations, and they're not very big at all. And in fact, some of these organizations actually make money from consultancy and advice. So it's in their benefit to implement regulations, because that's how they also fund their organizations. So that's something else that you got to take into account, that the people that are normally pushing for regulations are the ones that are going to benefit through licensing and things like that. And with regards to the mixers, this is one thing that governments are really cottoning onto, is that mixers could end or massively reduce the size of government, because if they cannot obtain the tax from transactions, then they're not going to be bringing a lot of money into their treasury. So they're beginning to realize now that with mixers, you can have completely anonymous transactions. And that's a massive threat to the nation state. And the more they cotton on to this, the more they're going to come down on the mixing services in particular. But again, if they come down, then I'm sure there'll be people who will make them even more anonymous, even more encrypted. So it's going to be a massive battle between the two forces, going forward.
For sure. I think we're all going to hear, I think all of us here are going to have a front row seat to that. So that should be fun. Enjoy the ride there, ladies and gentlemen. I think we can.
Actually, I want to
please go ahead.
Which is that I want to see how many of us think that a massive, and I'm speculating here, but just imagining the scenario where there is a massive crackdown on exchanges and wallets that allow you to buy Bitcoin for whatever reason. What are the chances that that actually increases the price of Bitcoin rather than decrease the price of Bitcoin over the long?
Well, like anything that they try to crack down, it increases massively in value, right? Like you see what happened with the alcohol, and with all it does is push it underground and create make it more expensive and push the value.
Scarcity, which increases value.
Exactly. So it's, and I think they're wise to that. That's why I think that they're not like just saying, that's why it didn't come out of the conference like saying crack down on Bitcoin. Like they didn't say that. They say crack down on mixers, monitor Bitcoin. Nobody said anything about, start, making Bitcoin illegal or anything like that. Cause they know as soon as they try to do that, that would just push the adoption curve up even faster. So at least that's what I think, but we'll see what happens. So I think we can move on to the next topic. So if anybody watching could go ahead and share out, tweet out the show, Facebook the show, let everybody know here we're talking Bitcoin. We're going to move on to the next topic. The major Chinese exchanges finally added trading fees, which seemed to resulted in a 90% drop in volume over the Chinese exchanges. Let me ask the panelists, is this a good thing or a bad thing? And have we seen kind of the last of the fallout from the addition of these fees, or is there more stuff to come? And what can we say about that? So first we'll go with Joel, and then Renegade Investor Edward.
Well, my reaction to that is actually Chris's reaction, which is that this is fantastic because it's first evening the playing field between European and American exchanges and Chinese exchanges, and reducing also the amount of sort of things like margin trading, which create a lot of risk. So I learned all of that from Chris. He can tell you more about sort of trading and all of those things. We have the luxury of not having to concern ourselves too much with those topics as a venture capital firm. But that does strike me as a good thing, largely.
Very good. We'll go with Edward next, and then Chris.
There's pros and cons for both. I think some of the pros is that for traders and investors, if you're trading, volume is a massive indicator of whether a trend is going to continue or not, or whether to take a position. And when you have a lot of manipulated volume, it makes entering those positions really difficult. And traders play a lot. People always think traders are just speculation, but they also have a lot of market depth for other investors and bigger investors to get involved in the market. So they do play an important role in the ecosystem. The other thing I would say is, on a positive note, because they cannot take out huge margin shorts, it's going to be more beneficial, especially when we're in an uptrend bull market, to just buy and hold coins now, because they cannot borrow coins to sell into the market. So your maximum profit when taking a short now is going to be massively reduced, as opposed to the massive potential upside. So that's going to be another really beneficial, I think, point for the market. And the third one is manipulation, because I've traded a lot of Bitcoin, probably been trading for like 3 years. Bitcoin. But one is that when it comes up to a really pivotal point where the Bollinger Bands are tightening up, you will always get fake outs. So you'll get a rise in the price thinking that you're going to break out of, say, an ascending triangle or something like that, only for it to get smashed through all the short orders. So that's something that you saw all the time. So it could prevent that kind of manipulation on the markets. And if someone who's wrote really well on this is Crypto Hustle, Rocky at cryptohustle.com. He does a lot of the trading mentorship for Chris Dunn. So he's made some really good observations on this. On the downside, I think there's other exchanges that still run this. So it's pushing people, again, who want to trade without trading fees to exchanges that might not be so well established. And like we've seen in the past, you often get exchanges that will run off with people's coins. So you've got the risk there of people trying to get the trading fees on exchanges that aren't so well established, and there's an added risk there. I think another risk would be, the good thing about volatility is it does make Bitcoin exciting. It drives the news cycle, it drives the hype, and when things get quiet, people don't even know Bitcoin's there. I mean, in 2015, I had people who thought it had even gone away. So that was the one beneficial volatility. And I'm not saying that's like a crucial element, but that's one thing that it's going to sort of take away if we have long periods of low volatility. But apart from that, I do think as a whole, it is actually a beneficial thing in the long run.
Very true. Yeah, I have to agree with you on there. Chris?
I think, well, I have a bunch of thoughts on it, but first and foremost, the People's Bank of China has showed us their hand here, which is important because China is in the back of every Bitcoin investor's mind. And I disagree with some of the sentiment that China is a threat. I think that China drives a lot of innovation, both in the mining community and the exchange community, and that they deserve more respect. But that's a separate topic. I think that here, if the PBOC wanted to kill Bitcoin, they would have come out and done it very quickly and quietly, or they would have attempted to do so. And I would argue they would have failed. But they're not doing that. They're being transparent and upfront about what they're trying to do here. And I think that generally is a good thing for the ecosystem because it's regulatory clarity. Now, I did poll people on Twitter, and I think 80% roughly out of a sample size of, I think it was 200 respondents, said that this was a good thing for the space, the overall transparency. That said, I ran another poll, again, I think around 200 respondents, and it said roughly 70% of people thought we're going to hear from the PBOC in the next month with maybe not more regulation, but just more commentary. So that's something to keep in mind. I think when I've been looking at the ramifications on the market as a result of the PBOC's comments, the single thing that most jumps out to me, and I wrote a blog post for this for CoinDesk called "This is not the same as 2013." When you look at the volatility throughout this whole process, it's been about a third of what the volatility was in 2013, which is really the last time that the PBOC made any kind of wide sweeping commentary around Bitcoin. So having volatility at a third is a huge win for these markets. It shows the increased liquidity since then, the increased diversity of exchanges so that you don't have a bunch of investors in one exchange running to the market and running to the exits, and you have the increased education and maturity of the investors themselves, so that when you have people selling, you have people taking up the slack on the other end. It's not just a huge rush for the exits. So I think the volatility has been a key guider or indicator for me of how much the markets have matured. Now, I am surprised by how much Chinese exchange volumes have fallen. When you look at TradeBlock's XBX index and the markets, that's what I've been using recently because Bitcoinity doesn't look to be reliable at the moment. But OKCoin, Huobi, and BTCC, I think in the last 24 hours, have traded roughly $10 million in the Bitcoin yuan books. That is insane. That's 2 orders of magnitude below what it was prior. I think you had those exchanges averaging roughly 3 billion in Q4 of 2016. Sure, that volume was not all authentic as we found, but I have been taken aback by how much the volume has fallen. All of that said, as Joel started off at the start, it's a more even playing field. These exchanges are now in the ballpark with GDAX and Bitstamp and ItBit and Bitfinex and Kraken, and I think that's a good thing. It takes away the one of the bear refrains of, oh, these markets are too speculative and we don't know what's what. Well, now we know what's what. And overarchingly, I'm not concerned, and I've been really impressed in how the markets have responded.
Yeah, I think, everybody was speculating that, I mean, almost everybody was speculating that the volume was fake. I mean, we were hearing this from bunch of different companies, bunch of different people, and that most of the volume was fake. But I think you're right, Chris. I don't think anybody anticipated 90% of it was fake. Like, that was intense. I mean, when you look at it now, all the trading now consistently is mostly being won by the U.S. The U.S. has the most liquidity now. The U.S. exchanges. Go ahead.
Well, I would push back a little bit on the idea of fake volume, because I think when you looked at some of what OKCoin and Huobi were doing, at least from conversations I had with traders, they had employed some market making bots to tighten the spread between the bid and the ask, which just makes the market more efficient. I think a lot of what disappeared was the incentive structure to encourage, degenerate gambling on margin long, margin short. And also, the more that people traded, the lower their withdrawal fees, right? I think were on Huobi and OKCoin. So it was an incentive structure to trade more. As a result, I don't necessarily think that a lot of the volume that has dried up is necessarily the fake volume. I think it's just removing the incentives to inflate what people would naturally trade without the incentives to trade. Does that make sense? It's just absolutely. A small differentiation.
It's subtle, but it completely flips, right? It completely flips the incentives, and so that's important. And it's true that I guess it's not fake volume, but man, these bots just kept trading into bots, and I swear, I was with everybody where we were just super upset where one little thing caused everybody to crash on every single exchange, and of course, it always started on the Chinese exchanges, right? Because that's where the most bots were being used. So the crashes always started over there, which then escalated all the way around the world, and then everybody drops, and so that's kind of mostly gone now. Like, I think we're going to see a lot more stability, even if even just recently when the Bitfinex happened, $70 million hack, like it's still recovered within like a month or two. I mean, it did not take very long at all. And though it went down a bunch, a couple $100, but I think that the next time that happens, it might go down like maybe $50, like maybe 100 tops. I think it's going to be a lot less than going down $200 from where it is. So I think that's, like, everybody I think agrees here, that's going to be good for everybody. And there was a whole lot of nebulous unsurety, nobody kind of knew what was going on. Like you said, Chris, now we know, since the PBOC stepped in, we can confirm. Like, we look at all the charts, we look at all the data, and we look at what the exchange's CEOs are tweeting, and everything looks good. They're just kind of taking a peek. They immediately saw the problem that everybody else saw and fixed it. So I think we should be good. Now, whether they're going to fix problems in the future, we'll have to see. But I'm glad so far for their stepping in. So we'll see how it goes from here. But very interesting to see. And anybody else have anything else to say on this one?
I've got two closing comments. One thing that I'm watching, because I don't think everyone has had to remove, I don't think there was an immediate recall of margin. I think that it's now you can't take any more margin long or margin short positions. But I do believe, and I may be wrong here, but I remember reading at some point that it's not that all those contracts have been pulled out of the market. So what I'm watching, the reason the price would be affected up or down based on a curtailing of margin is if you had more people buy a long shot, margin long or margin short, so that when you pull those out of the market, it unbalances the order books, right? Because if you can lever up 30x long or 30x short, then pulling, if 99% of the people on margin were long, then removing that liquidity would hurt the market in terms of shifting the order books more to short than to long, or more to sells than to buys. So I'm watching to see what happens. We haven't had any indication that there was a strong imbalance in the markets there. So that's a good thing. It means there was somewhat of a balance of people using margin to go long and short. So I like seeing that, but still have my eye on it. The other thing I'm watching is, what's going on with the yen. A lot of the bigger exchanges that don't charge fees now are in Japan. and we may have a shift of volume to Japan. I think one of the UK exchanges recently announced that they're going to be implementing no trading fees. And as a result, liquidity is king for an exchange. Liquidity begets liquidity. And are we going to have another rise of another region that brings a lot of trading volume because those exchanges say, hey, this is our cookie to take now. So that's the second thing I've got my eye on.
Very interesting. Yeah, I mean, and you can also kind of see some of these contracts if you follow. Now I forget. I'll have to put it in the notes. But to following all those whale calls, I think it's whale calls. If you follow the whale calls Twitter account, that's interesting to see how many these big huge contract holders, if they're liquidating shorts or if they're liquidating longs. Interesting to see. So obviously coincides with the price. So very cool. Thank you for that, Chris. I think we can move on to the next topic here. We got 82 people viewing us right now. We're loving all the people in the chat right now. Conversation is going on. If anybody watching this can go ahead and I think we can move on to the next. I think we got there was a hiccup there. Yeah, so if anybody watching the show could go ahead and tweet out the show, Facebook out the show, let everybody know we're here talking Bitcoin. We love to have all the people in the chat. Don't forget to, of course, add your comments. Like us or don't like us, whatever you like. Let us know what you think of the show. We're going to be moving on to another topic. We might have a fourth topic, but we'll see if the guests will hang on. It's only been less than an hour, so we're kind of moving through the topics pretty fast with less people. I usually have more people on, but this is still fun. So we'll move along to the next one. Talking about ICOs. So basically, there's been a bunch of articles, kind of titled like the ICOs are coming, right, in 2017. And really, of course, the ICOs have been here for a long time, right, since 2013. But now there seems to be this new influx with the price of rise of Bitcoin and the price rise of Ethereum, from $2 to $10, and then from Bitcoin all the way back up to hitting new all-time highs. It seems that we're going to enter like this new generation of ICOs in 2017. And so I kind of want to get the panelists' views on that. First, Joel, what do you think about these ICOs? Do you think that that these things are legal, that everything is looking good, that we're just going to have a bunch more, or do you think that these will kind of curtail a little bit towards the end of the year and maybe swing back more into Bitcoin? What do you think?
So my first thought is I hate the term ICO because it's way too close to IPO, and I just think it's sort of, I mean, it may be unstoppable now, but I just like to take every opportunity to say, don't call them ICOs and just do that.
What do we call them then, Joel?
Token launches.
Do a coin sale. Coin sale.
Okay, coin sale. I like coin sale. It's more indicative of what it actually is. Yeah.
Right. You're selling tokens. So it's a token sale. So this is something that we spend a lot of time on, and in a bunch of different ways. One, thinking about and really forming a thesis around, why we like these things and why they're important. We can sort of talk about that later because that's a meatier thing about the sort of the reasons why we believe these are good things. In terms of sort of where that's going and, the ICOs are coming, I do think that's true. And I do think that it sort of comes from a couple of different places. One is that we've now built up a bunch of infrastructure that did not exist in 2014 to actually develop new kinds of services and networks that operate with a blockchain architecture that use an altcoin or a token or a new coin, versus in 2014 when most sort of altcoins were just Bitcoin forks with a sort of different feature set. And back then, most of the new coins and tokens were competing with Bitcoin with new features. And most of them failed. And really, there were very few that actually were using this new architecture to deliver a new kind of service that used its own currency. And when you looked at the ones that survived through that process and even thrived through that process, those are the ones that are still around and that are still operating and still growing. And so and a lot of that is sort of due to Ethereum and the success of Ethereum that sort of proved that we can now sort of create new kinds of of internet services that operate with a token, and that token can generate good financial returns. The thing that I do, that I'm paying attention to is that earlier comment about the new funds that are emerging that are focusing exclusively on tokens and participating in these token sales. And to add to that, funds like USV, which we're planning to begin investing in tokens this year. We have some companies in our portfolio who might do a token sale, and there are companies outside our portfolio where the only way to invest is to buy the token. And so we're seeing that shift in the market where a lot of the interesting companies and interesting projects that we're seeing are shifting to this model where they're forgetting equity altogether and then just going straight for the token for a bunch of whole different reasons that are now very real, as opposed to 2014, which was much more sort of pump and dumpy. And a lot of them are in development and have been in development for quite some time. We're fortunate that because of where we sit in the market, we get to meet a lot of these teams early on. We get to talk to a lot of these teams early on, and a lot of the stuff that's going to come out this year and next year is actually really, really good technology and things that we're very excited about. And there's applications like file sharing, or applications like file sharing, file storage, and applications like decentralized compute and those sorts of things that are very, very interesting, and where the token makes a lot of sense. And so I do think that now we're hitting the point where the supply, let's just call it that way, of companies creating services that use a token is increasing, and the demand for those tokens is also increasing in the form of new funds that are focusing on this. And then in addition to it's mostly been individuals and individual speculators for the last couple of years. I think we're going to start to see this year a lot of more institutional capital come in, and that may sort of kickstart this large bubble over time. And then there's a separate question about when that comes crashing down and why. But I do think that's a couple of years away.
So real quick, I got to ask you, I got some feedback again from somebody. Might be Edward. Might have to mute it. But real quick, so I have to ask you this, Joel, real quick. When you mentioned, the success of Ethereum, what are you referring to there? Are you referring to it going from $2 to $10, or what are you referring to when you say the success of Ethereum?
Well, when I say the success of Ethereum, it's not so. First of all, I'll preface all of this with saying that something that we're thinking about is how is this ecosystem going to evolve, and how many sort of foundational blockchains are going to be versus sort of smart contract-based protocols on top versus applications. And we are conscious of the fact that we're extremely early to this, and the 3 to 5 foundational blockchains that will exist in 10 years may not be the 3 to 5, may not include Bitcoin and Ethereum. But by the success of Ethereum, I mean, I think Ethereum showed a lot of progress and momentum in a year for a service that was kind of unprecedented. And there's that component of going from 2 to 10 very quickly, but also the community is very real and very passionate and sort of very committed to making this work. And for all its drawbacks, it largely works, right? It largely does the thing that it's supposed to do, and that's gotten a lot of people to sort of come in and sort of contribute to that community. And to me, at least, that was the first, or one of the first proof points that you can that this is sort of a fundamentally new architecture that can be applied to new services and not just create a currency. And the thing that I am most interested in fundamentally at a very high level is this new design that we've come up with for building and delivering information networks in a way that does not accrue market power to a single participant, but rather to a network of participants. And that design can be very powerful because we think it's the key to unlocking the network effect market power that's consolidating power around a small number of large companies like Google, Apple, Facebook, and Amazon. And so I think that, it's an example of a community that bootstrapped itself by selling a token, and then financing the development of the service by selling a token, and that the token has some utility that people are attracted to, that's attracting an ever larger community. And I think it's something that can be replicated to every kind of information service.
Okay, cool. So let's go with Chris next. What do you think about these ICOs, Chris? And do you think that they're going to increase in 2017 or decrease in 2017, or what do you think?
I think the genie's out of the bottle. I think you may also get a little bit of pushback here, Vortex, for having people who are. This is the Bitcoin News Show, right? But we're clearly talking a lot about coins outside of Bitcoin, and I do fall into Joel's line of thinking, and Joel has influenced my thinking in that I think that Bitcoin is extremely important, and one of the things that Bitcoin has done, and it's part of a broader trend within technology, is the idea of decentralization and P2P networks. Because Uber, Airbnb, Lending Club, these are all peer-to-peer networks in different ways. And Bitcoin is a continuation of that trend. It uses a different technology in order to bring people together in that peer-to-peer and trustless manner that's really important specifically for global currency. But I think that, and I know this is controversial to say, but that this is growing beyond Bitcoin. I'm not falling into the permissioned or private blockchain camp here. I think that the real innovation lies with these permissionless networks that are an architecture that employs a token to keep everyone in economic sync with one another, right? That's the point of the token, to incentivize the players in the network to keep the architecture secure and providing the decentralized digital service that it purports to provide. With Bitcoin, I really think that the killer app has been staring us in the face all along, and I think that the term cryptocurrency really applies well to Bitcoin in that it is a currency, it's a means of exchange, store of value, unit of account. Granted, it is a 21st century currency. That's why it's programmable. That's why it's got more flexibility than dollar bills. But that is going to be its main use case, and it has been designed for that, right? It optimizes security, or it targets security somewhat at the expense of flexibility, and that's important for Bitcoin to do. But going forward with ICOs, I do expect a continuation of the trend, and I expect a broadening of what we think of these assets and protocols as. For example, I was thinking late last year of this idea of a lot of these being digital commodities, in that, we have markets to price wheat or oil or natural gas or whatever it may be, and those are physical commodities that are important to the way our world works. But now digital commodities are arguably just as important to the way our world works. And those are things like storage, compute cycles, bandwidth, so on and so forth. And I think that what we're seeing with some of these ICOs, I mean, ones that currently exist like Storage or Sia Coin, I think Filecoin's coming to market somewhat soon. That is a pricing of a digital commodity called storage. And that's valuable to our world, but we don't have markets yet to price those things. And I think that in time we will, and that that transparency and price discovery is really important for provisioning markets that are efficient, which ultimately benefits the world. And so I'll shut up now, but that is my vision, I guess, on a broad scale of how the space is unfolding before us.
Yeah, and it's important to notice that, yeah, we are on the Bitcoin News Show, right? But of course, we can't just talk about Bitcoin because, this is 8 years later down the road now. There's all sorts of these different projects. And, what's really important to remember is that, Bitcoin is really great at what it does, but, everybody knows that it's really hard to change. And it's good that it's hard to change. That's good. But there's going to be a crazy amount of innovation. There's going to be a crazy amount of people out in the world that are going to want to do all sorts of crazy ideas, right? They want to test out all sorts of amazing, crazy ideas and crazy stuff. And that's great. To do that, they're going to, create new blockchain projects and new projects that hopefully tie into Bitcoin. Otherwise, they're not going to be very successful, right? You have to somehow tie into Bitcoin at some point. But there's, things like Made Safe, and there's these projects that are very, very interesting that need to happen. But they can't happen on Bitcoin because Bitcoin is kind of for one major thing, And if we alter it too much, then it won't be good at that thing. So we need to keep Bitcoin solid. We need to keep Bitcoin secure. But at the same time, I can't wait to see what the world is going to come up with all of these different projects. So I'm kind of torn, because I kind of hate ICOs and I kind of love ICOs, right? I love all these people innovating all around the world, but I hate the fact that I hate the shallow ones, right? That don't bring very new things to the table and then just sell it anyway, because most people don't understand that the features anyway. Most people don't understand the feature sets that these people are claiming. So if you don't know what you're talking about, then everything is just going to look amazing. When in reality, all of these ICOs, maybe two, like for my example, like out of 2017, my opinion, maybe like one or two, maybe like projects will come out that's super interesting out of the hundreds and hundreds and hundreds of ICOs that'll probably happen. So we'll go with Edward now. What do you think?
I think ICOs are used for two different reasons. You get the people that purely speculate on them as a way to increase their Bitcoin holdings. I think that you then get the people who are genuinely interested in the underlying technology, who understand it. Maybe it brings a different unique selling point or a unique feature. But there's some things that like people really got to watch out for with the ICOs, because they're a bit of a minefield. And that is like, if you buy on the first day or in the first week, you run a severe loss of getting drawn up in the hype and then the market dumping on you. So like one good strategy there is just to, after the ICO, just wait for the market to bottom out after a month, just so level people are going to accumulate at. Because if you run in first day, you can really get your ass handed to you if you have a big pump and then a dump. The other thing I say is, like the other said, you've really got to find coins that really bring something unique to the table, because if it's not unique and it can be applied to the Bitcoin blockchain, then it will be, because the security is so much better on the Bitcoin blockchain. So there'll be no point in using that service if you can use it on Bitcoin if the security is much better. So I think that's one thing you've really got to look out for, because obviously Bitcoin can be incrementally developed. So if it's not unique to that network, then it's likely that if it has something that's worth replicating, it's going to be applied to Bitcoin. The other thing I'd look for the team who's developing it. Make sure that they have a huge amount of experience and funding and they're well established, because if they don't, then it's likely that the team isn't going to stay together. It's going to fall apart. Then interest will leave that market. And also look at possibly the trading volume and the trading volume, because if it's not if it doesn't have enough liquidity, it's not going to be liquid enough to bring in other investors in order to bring up that market cap, so to make it viable for other investors to invest in it. So that's one other thing that I would really look for. And yeah, that's quite an important thing. But the one thing that I would say is that I'm sure there will be some good ICOs that really do provide some unique level of service, but I still believe that Bitcoin is going to be the dominant one, almost like a reserve currency, which all these other ones trade in and out of. But I'm going to be keeping an eye on it. I've got a friend, the meetup group that I go to and co-host, that he's really on top of this stuff. So I'm going to hopefully do some interviews with him as well on this, because he's been really good over the past. He's picked 3 or 4 that have done really well. So I'm hopefully going to have an interview of him on my channel pretty soon.
Absolutely. And I really think there's an important part that I want to important point, Edward, that you brought up that I want to second. I think, which is the fact that a lot of these features, that these coins have, will eventually be rolled into Bitcoin. It will, of course, take long time, possibly years and years, right? But eventually those features, if they're significant and good for Bitcoin, will be moved into Bitcoin. But a lot of this crazy stuff, like MadeSafe, I mean, obviously you just can't roll into Bitcoin. So there's going to be a lot of cool projects as well. But just know, people, that there's very, very few projects, few and far in between, that are actually going to be interesting, and actually going to produce something other than speculation, value other than from speculation. So going to be really interesting to see. Like I said, there's only a couple that I'm actually interested in, and there's already hundreds and hundreds and hundreds of coins. So it's going to be a fun, I think, to watch all of these things play out. So does anybody have
actually? I'm going to interrupt very quickly because I think this is a very interesting and important topic. The sort of, you develop something outside of a major blockchain like Bitcoin, how long until that gets adopted by the main chain, and why does that get adopted, and how do you, how large should that gap be between, if you're starting one of these things and is that a risk, right? And so, I am not sure that, I want to believe that Bitcoin will evolve over time, and I've made that argument for a really long time. But lately, I've been thinking about whether that's a good thing, in the sense that, and this goes back to something that we're trying to figure out is how is this ecosystem going to evolve, and if you're going to have 3 to 5 major foundational blockchains, what are their features and what sets them apart from each other? And I think that largely comes down to governance and, going back to Renegade, the importance of the team. And I think the most important thing about the team, on top of the crucial sort of aspects about whether are they technically capable, and are they capable of managing a large sort of influx of cash in order to drive the development of a project, that is that is crucial. But I think what keeps these networks defensible over the long term is good governance. And so it's the pace at which and how do you manage your network and how do you manage your community. It's a lot more like being the president of a country than the CEO of a company, and that you're the CEO of a company, you can sort of change, the color of the logo from red to blue tomorrow, and no one, it's your word, and that's the law. But when you're sort of managing, when you're a core developer in one of these networks, or the lead developer, you're more like a president, and you have an executive team, which are your developers, but you also have like a Congress and a constituency of people who hold the token, who are pushing you all in different directions. So it becomes very, very political. There's a concern in the market today that Bitcoin does not have a very strong governance system, and going back to these issues like the block size debate and soft forks and things like that, and SegWit. I think it's too early to tell. I think Vortex, you mentioned in the beginning that it's really good that Bitcoin does not change, and I do agree with that it's very valuable to sort of have a network that just does not change, and that that it's going to work in the exact same way in 10 years as it's going to do today, because that drives a lot of confidence. But that may be a feature rather than a bug, when you consider that maybe this is not a Bitcoin problem, this is a problem of this architecture, that once it evolves to a certain point and it finds its use case, it just doesn't evolve any further because it doesn't have to. But if that is what allows there to be multiple networks and multiple services that compete to each other because of that feature, that once it sort of gets to a point, the incentives to evolve it diminish, that may actually be the answer to the governance hell that would exist if there was one chain to rule them all, and there's a small group of people who now maintain this, multi-trillion-dollar network and with thousands of companies and all of society built on top of it. I don't think we want to be in that world. I think we want to be in a world where we have more specific networks with their own sort of governance tailored to their specific communities, in a way that actually allows for rapid innovation. Because if Bitcoin was the only sort of blockchain in the world and everyone was developing on Bitcoin, we may not see all of these new innovations that are coming out, like MaidSafe you mentioned there, or well, it's been around for a while, but we may not see all of these things that are emerging if we had to resign ourselves to the governance of a single chain.
Yep, and it's important, I think, for Bitcoin, because Bitcoin is going to be the coin that really, in my opinion, backs up all these other coins, right? Like it's going to be the back. Yeah, we need, like, crypto needs something to be able to back up their ideas on, something that we can say, okay, look, this coin, we know this coin's going to work. So how is this coin, going to be different? And so as long as there's confidence in Bitcoin, then there can be confidence in this entire new, crypto economy. And so that's what I'm excited for, is just all this innovation. I just want, there's a bit of a divide, between people talking about, like, even Bitcoin Uncensored. I was asking, why can't you just use Bitcoin? Why can't you just use Bitcoin? And I think most people would want to use Bitcoin, but we got to keep it solid. We got to keep it safe. And so we got to keep it limited in features. And so that's that allows for this entirely new economy to emerge on the basically on the web, which is all these new cryptocurrencies. Unfortunately, it's Wild West, so it's going to breed a lot of scams. But it is nevertheless, it is allowing people in their bedrooms, right, to like come up with this crazy ideas that they would never have gotten an opportunity.
Just like the internet in '93.
Now there is one more comment I want to push back a little bit for you on governance. Just when it comes to Bitcoin, you know, because really there is this perception that there's this governance issue with Bitcoin, right? But there's only that perception for people who think that Bitcoin requires governance, and so. Yeah, and so far, you know, Bitcoin, you know, it's working out the block size problem, it's working out issues. But to me, and I think a lot of people who've been in Bitcoin a long time see this as a good thing. You know, we see this as consensus. There's a lot of people who don't see it as a good thing, like Roger Ver and you know, and the Bitcoin Unlimited team and stuff. But really, for the most part, I think most people see this as a good thing, as keeping it simple, keeping it secure, keeping the attack vector low. So we'll see how it goes. But does anybody else have anything else to comment?
I want to bring up a key point to all of this, and that is security. We really haven't had, I mean, Ethereum went through a series of denial of service attacks, right? But it wasn't, and the DAO was a form of a hack, I suppose was a form of attack. But we haven't had, for example, someone attempt a strong 51% attack against Bitcoin. We had Ghash, right, got above 50% for a period there and backed off. And there are people that claim, you know, different mining cabals in China could easily take over 50% if they wanted. But when these networks get big enough, a 51% attack would be catastrophic in terms of the companies and some of the economies that they're supporting. And really, while people, and I'm not talking about the permission space, right? I'm not talking about Raft or PBFT or any of that stuff. I'm talking about permissionless forms of consensus and security. We know proof of work works. There are a lot of different thoughts out there about proof of stake, delegated proof of stake. Now, you know, there's POET, proof of elapsed time. There's all these different different ways of keeping the network in economic consensus with itself. And I think that depending on how that plays out is going to have a pretty sizable effect on the diversity of these networks. Because if it turns out that proof of stake you know, doesn't provide consensus in the way, or secure consensus in the way that a lot of its proponents think, and I'm not smart enough to know. But if that doesn't work out, then you're going to always want to anchor into a proof of work chain. And proof of work generally, I would say, lends itself to monopolistic tendencies, right? In that you just keep on adding more and more hashing power to that chain because that makes it forever stronger. And so that's one of the things that I've got my eye on in terms of how does this all evolve. Right now, I do think we're going to have a broader proliferation of environments, but that is with the caveat of that's assuming that different consensus mechanisms work. If they don't and they prove faulty, then we could have a broader reversion to Bitcoin, in which case it'd be really interesting to see, okay, how do sidechains work out? Where's rootstock at? What's rootstock doing? And how much can you create this to be something like the internet, right? Where you have the 8 different layers of the network with just this very rudimentary blockchain at the base. Verdict's still out, right? As I said, right now I'm leaning to the world that Joel described previously, but there are these things that need to be proven out.
Very interesting, very interesting. So I think we all are on agreement here that there's going to be all sorts of diversity coming out, and so we're pretty excited. Does anybody else have anything on this topic? No? Okay. So if the panel's got time, I mean, we could do one more topic. I guess it's been an hour. I would just like to maybe just do one more topic. Maybe I'll let the panelists and the chat see. But I was thinking of either like, you know, maybe the ETC that's going to be dropped on the market, or the Trump wall and how that's going to like affect Bitcoin and remittance. Which one do you guys want to do?
Let's do Trump.
Yeah, might as well, right? It's fun. So we'll go with Joel first. So like, we got Trump talking about, using all of these crazy executive orders to be able to build this wall. It looks like he really is going to try to do it, and I want to hear from the panelists, like, what do you guys think that how do you guys think this is going to affect remittance with Bitcoin specifically, and is this going to gain remittance? Is this going to lose remittance? Like, how do you guys think this is going to affect it? We'll go with Joel first.
So I actually blogged a little bit this morning about the sort of Trump executive orders. But on the topic of remittances specifically, I'm not sure that in the short term that's going to drive a lot of movement in the remittance market. I think they're sort of two separate issues. People who need to send money home, they're still gonna send money home, and until they get a Bitcoin banner and an easy user experience in front of them to do that elsewhere, they're not going to do it. And I don't think that's driven by the Trump wall, directly. I do think, however, that there is a possibility that in the long term, these orders and this sort of hostility towards countries outside of the US, it may drive a social phenomenon to try and just not use the dollar as a way of resisting. And that may drive more Bitcoin adoption for remittances. Now, the reason I think, we're far from a world where remittances with Bitcoin are sort of mainstream is that you kind of need a lot of exchange infrastructure for that to work. And so, for example, I can't send money to the Dominican Republic using Bitcoin because there isn't a Bitcoin exchange other than local Bitcoins in the Dominican Republic, and it's just going to be, a very poor user experience, right? Unless you get someone like Abra or the other companies that sort of establish these posts and sort of fill the role of the exchange, you're not going to get that sort of very seamless, send the Bitcoin out. And that's going to take a little bit of time to develop really on a global scale to the point where it actually ends up being as useful and ultimately as cheap, because it's, you have to pay Western Union $5 to send 50, and that's 10%, and that's really high, but it works and you can get it done quickly. You don't have to sort of school people how to do all these things. But I am thinking about sort of that the potential of more people adopting Bitcoin outside of the remittance context because of Trump's policies as a way of resisting against the dollar and lowering the leverage that the U.S. government has over other countries.
Very interesting. Very interesting. Thank you, Joe. We'll go with Edward next. What do you think about this? Edward?
Oh, hi. Yeah. Sorry, I think it's a bit of a temporary connection issue.
This is done live, ladies and gentlemen. This is done live.
So yeah, going to Trump. Okay, so what's happening around the world, and this is what I talked about in the very first video I put on my YouTube channel, is that relationships are going to break down between countries because networks are going to start becoming politicized. So things like SWIFT and all the other payment networks you have in the world are going to start becoming politicized when you have a world that's dividing because of the economic pressures and the political pressures that are building up. So in the first video I ever did, which was 9 reasons why Bitcoin is going to outcompete private blockchains, is that everybody in the world is going to want to have a platform which provides a completely level playing field which no one can politically gain. So you imagine Bitcoin is the perfect global system to provide a level playing field for everyone to cooperate on an international platform where no one can interfere politically. That is why I am so bullish on Bitcoin replacing SWIFT, because if you remember in 2014, UK Prime Minister David Cameron actually said that sanctions against Russia could be excluding them from the SWIFT network. So that was a type of economical warfare, or a threat of economic warfare against Russia. And shortly after that, China actually started to work on their own SWIFT system as well. So the more and more you have these divisions between countries, and I don't think this is necessarily being driven by Trump. I mean, these are pressures that have been building for ever since we came off the gold standard, where every single currency became a fiat currency. We're reaching that end game. So this isn't a result of Trump. This is decades of malpractice in finance with the destruction and debasement of currencies, which is coming to a head and creating all these political tensions in the world. The more and more this happens, and this, in my opinion, the whole system is terminal. There's no stopping this trend. So the more and more this happens, the more and more people are going to fall to Bitcoin as a non-political network for value transfer around the world. And that is why, again, I'm just so bullish on this, because in 2016, things look worse than ever in that regards to global tensions between countries.
Very interesting. Very interesting. Chris, what do you think about this?
I think, first off, with Trump and the wall, what could happen is, if, depending on how serious Trump gets with different tactics to make Mexico pay for the wall. Right now, one of the ways it seems is he's actually going to be, in a way, taxing the U.S. consumer, right, in putting a heavier tax on Mexican imports in order to pay for the wall. But there are different things he could do depending on how much Mexico rebels, and depending on the kinds of capital controls put in place. It could increase use of Bitcoin as a remittance channel somewhat. Again, that's very speculative. We don't really know fully what's going to go on yet. But what I would say more broadly, I've talked with a number of remittance companies in the last couple of months, and they are growing extremely fast, 10 to 20% month over month, which is anywhere from 5 to 10x a year, which is hyper growth. And the way that these companies have to do it, as Joel was talking about with the capital intensity of this build out, because you have to have lots of endpoints, is you need to focus on a channel, right? So the channel between Philippines to South Korea, I think right now is 20% Bitcoin of all the consumer to consumer remittances. That's huge. That's a major win. And so the more you focus on these channels and you make it so that it becomes people's modus operandi to use Bitcoin within that remittance channel, then you can slowly build out the effort from there. I mean, Western Union didn't create all its endpoints overnight, right? It's taken, I mean, Western Union started off as a telegraph company. It's been around for, I don't know, over a century, I would guess. So these kinds of things take time. I think that international money transfer has been talked about for Bitcoin so long that people have stopped talking about it. And usually when people stop talking about something like this is when it's really actually starting to happen. And that's when you ascend out from that trough of disillusionment. And with regards to Bitcoin and remittances, I think we're starting to see that in certain channels. And over time with companies like BitPesa and Abra and BluePen and all these guys, Bitpago, you're going to see a network build out that I do think fundamentally has a superior cost structure to Western Union, because Western Union, as its cost structure, it requires the build out of these brick and mortar locations, whereas Bitcoin requires a dispersion of a peer-to-peer network. Yes, you have to go through the proper regulation, but you can have a guy with his cell phone, right, and a wad of cash in one hand and his cell phone in another, and he can be your brick and mortar endpoint to exchange out the native currency that you want. So I think that with those things in mind, we can expect to see over the coming decade a huge swoosh in Bitcoin remittances.
And another component, just to extend that point, Chris, is that Western Union had to do the build out everywhere in the world. Here, as you point out, you focus on one channel, you own that channel, but because you're using Bitcoin, you're plugged into the entire system. And so you can let one company build, Mexico to Nicaragua, and let another company build Spain to the Dominican Republic. But if they're all using Bitcoin, they're all open platforms by proxy, in the sense that you can then build applications on top that abstract and aggregate all of these sort of corridors in a single place. But the bulk of that layer is actually Bitcoin. And so it's not really creating a new monster on top that owns all of that owns the network and sort of reaggregates the entire thing. But that layer on top is actually Bitcoin, and that's something that's very powerful.
Yeah, I think that's an important point to understand. Like, people expect Bitcoin to be just rolled out, like people are just waiting for Bitcoin to be done. They're waiting for Bitcoin to be rolled out. And okay, taking, a lot of the early Bitcoiners are like, okay, did we win yet? It's not going to be like that. It's going to be layer after layer after layer after layer. And that's a really important point. Nothing is built, even with at the speed of the internet, nothing is built in like a day. Okay. Stuff has to be world services for millions and millions and then billions of people to use, has to be rolled out and built out over time with many layers. It takes, lots of people all over the world to get everything working together. Even though we're using the internet makes it quicker, right? Instead of 100 years, we can do it in like 10 or 20, 30, right? So Bitcoin's only been around for 8 years. The internet took over 20 years to really go mainstream and to be on everybody's desktop. So, I think most people are fully expecting, the Bitcoin revolution to happen in somewhere in the 2020s. Really, though it is already, of course, changing the world in a good way all over, but really to change the whole world, while the whole world, billions of people's lives, that's going to take years, and we're really excited for that to roll out.
To pull back perspective for a second with regard to the internet, I believe packet switching, which is one of the core parts of the technology that enabled the internet, was first developed or released in a paper in 1960. I think that was the date. So we're now 57 years later from that core innovation, and from there, it took different universities and the build out. But again, in some ways, you could claim that Bitcoin and the blockchain space is still pre-1990s, because Mosaic in 1994 was when things started to go much more mainstream. I think that we have lots more news around the Bitcoin space right now simply because we have the internet, and so it proliferates the news much more quickly. But in terms of the people using it and the amount of adoption, it might actually be better to think of it as earlier than the 90s, and to keep in context that it took, from 1960, the development of one of the core technologies to the internet, until 1994, so that's 34 years, in order for the first common browser to come about, to help alleviate some of the pressure that people feel to make things happen with Bitcoin now.
Yeah, I'd only, maybe alter that slightly to say that, Bitcoin is part of the internet, right? Bitcoin is like part of the internet revolution. It's part of the internet still evolving. It's part of, you can take it back, even say it's part of packet switching still evolving, right? So all these technologies are evolving together, and because of that, became Bitcoin, right? It was just putting together previous technology. So it's really, really interesting to see Bitcoin become a part of the internet and fulfill that missing piece of being able to transfer value instantaneously. So very cool. Does anybody else have anything else? Otherwise, I think we can end it. Nobody else? All right. Well, thanks so much, guys. Thanks so much, everybody, for joining us. Thanks so much for my guests. Thanks so much for everybody in the chat. Joel, thank you so much for joining us. Where can we find you, Joel?
Well, first of all, thank you again for having me. This was extremely fun. I'm on Twitter. I'm at jmonegro.com, and I'm also on you can find more about USV at usv.com, and we spend a lot of time hanging out there.
Awesome, man. Union Square Ventures for all those newbies who doesn't know what USV stands for. Edward, where can we find you, man?
Yeah, likewise. Thanks so much again for having me on the show. I always enjoy it a lot. You can find me at renegadeinvestor.co.uk. That's my website. So I use that for news aggregation and all my content. I've also got a YouTube channel, Renegade Investor. That's where I post all my videos, and I've got some new content coming up next week. This should be good. And you can also find me on Twitter at SharkyBit, and I post there most days. So yeah.
Awesome. We just end up, just for the channel, so the channels, we all end up retweeting each other anyway. So it's good to know. Chris, where can we find you, man?
I love the handle SharkyBit, by the way. That's a good one. My hat off to you. Yeah, I can be found on Twitter as well, at ARK Blockchain, and that's the best way to communicate with me.
Awesome. Well, thanks so much, guys. Just real quick, one last plug for Chris. That article, man, was so good. You know, why 2017 isn't like 2013. Everybody's got to go check that out on CoinDesk. It's a really great article. And then, of course, the awesome videos that Edward posts. Everybody's got to check those out. So thanks so much, guys, for joining us. We're going to be back again 2 weeks from now. We have changed the schedule from Monday nights to Sunday afternoons. So hopefully that's working out better for everybody. Everybody so far seems to really like it. So that's really good. We can get our people from across the pond on at a reasonable hour. The next guest should be Ryan Shea from Blockstack in 2 weeks from now. So, and then after that should be Samson Mao. So really hope to, from BTCC. So hopefully everybody can join us again. Thanks so much, guys. Until next time, just keep talking Bitcoin. See you guys later.
See ya.